Hello traders, Gary Wagner here. Just about 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, April 14th, 2016. And we're looking at the Dow Jones Industrial Average, which has eked out a small gain on the day. Looks like it's going to close up as we go into settlement, up about 18 points on the day. Still shy of that elusive 18,000 mark, but getting much closer day by day, 17,926. Now, a very, very tight trading range in terms of where the market's been. 962 is the high on the day, and 885 is the low on the day. So as you can see, not very much range at all, under 100 points in terms of the entire range on the day. Quite a contrast from yesterday's trading activity. Standard & Poor's looks like it's going to close in essence unchanged. As you can see, we've got an even tick at 2076 to up a quarter point, 2076.25. The low 68.50, the high 81.75, so a tight range also in the Standard & Poor's today. So there's no doubt we did get an upside move within the Dow Jones Industrial Average. NASDAQ down a little bit, S&P in essence unchanged. We'll look at an S&P chart in a second. But the first thing that I did want to bring up on today's show is crude light. Crude light, we noticed a decoupling between the effect of higher crude or lower crude and higher equities and lower equities. We noticed a recoupling again over the last couple of days in which we saw both crude oil and U.S. equities move in tandem. What I'm really noticing now, this is about $42 on the crude oil chart. We're looking at a daily chart, but look at the last couple of trading days. Now today down 0.62%, a little bit over 0.5%, 41.50, down 26 cents per barrel. Very slight move on oil. And my sense is right now that we probably have seen some sort of potential top and some real resistance in the market. Now the question is, if we see weakness in oil, will that spill over to U.S. equities as it has in the past? Because we've seen it both have a positive correlation, meaning the two move up in tandem or down in tandem, and a negative correlation in which one moves up, the other moves down. And typically it has been crude oil leading the way on the downside, and that decoupling came when, even though crude was trading lower, equities began to move higher. And that really occurred once the market, crude oil hit these lows really back here at 26 and started moving back up. And that way, this is when we saw that tandem move here. Of course, we saw a little bit of decoupling here, this being a daily chart. And now the question is whether or not we will see that positive or negative correlation. We're looking at a daily chart, Standard & Poor's 500. This, of course, is the E-mini. We absolutely took out this prior low at 2071 the other day. You can see that high right in here. We definitely had a close that exceeded that high. Now, in terms of today's range, the range went into the area, the trading area that we saw when the market moved up and over this most recent high. But more importantly, it closed above it, currently trading up about 50 points on the day at 2076. My sense is that if we see this market hold stable above, call it 2080, a move above there, it's absolutely destined to go to at least 2109. These tops are now within almost grasping or reaching distance, and my sense is, as I've talked about throughout these last couple of months, that we are going to take a stab and take out these more recent highs in the market that came in towards the last quarter, of course, of 2015. With us, it's simply a matter of positioning ourselves. I was actually hoping that today would be a slightly down day so we could implement and initiate a long position in the market. We'll look to do that tomorrow if we see that the market has got some small dip that allows us to get in. We are flat in the market, but as I said the last couple of days, I am looking to position ourselves from the long side in the Standard & Poor's 500. And this is where we can really see the key distinction between Japanese average and standard candlestick charts. This is our daily chart, but this chart is in Henkin Ashi format. And when we look at that, if you recall, we had the doji, that very, very tight range between the open and close that had gapped above that 2071, the prior top that we identified on the last chart we looked at. Now, when we look at this particular chart, Japanese average, you can see that we've got a pretty large range on the day because, again, the open is simply the midpoint of the prior candle to really where we're closing now, which is it's 2076.50, but when it's averaged out 2075.75 on a Japanese average. But as you can see, we've gone not only green over the last couple of days, but we have really weathered out this small consolidation, this rest area that occurred really beginning of this week. As I said, we'll look to position ourselves tomorrow. If not, we'll look to position ourselves next week. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for the weekly review in Trending Markets. Bye-bye.